Well, good morning, everybody, and welcome to the Locking Your Success Options Trading for Income Weekly Update for March 23rd, 2015. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please note that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And also that we are using hypothetical computer simulated performance results and trades in the presentation, so please be aware that the presentation is believed to be as accurately represented as possible. However, live results may vary. If you're watching this on YouTube or some other venue, come on over to our website, check out our programs, the M3, the Bearish Butterfly, the Rock, the M21, and the Trading Triangle program, as well as our one-on-one coaching programs. And become part of our inner circle by joining our mailing list. Get your free report, 7 secrets to becoming a successful trader, and sign up for this free weekly webinar. And of course, stay tuned for our programs we got coming out. We got the super simple spread trades, should be out next month, and we have our advanced position management live seminars going on May 18th and 19th here in Manchester, New Hampshire, and we have a bunch of other stuff coming out later in the year, so it should be really cool. All right, let's take a look at what's going on in the markets. As we were saying last week, I was expecting more of a bullish move than anything else. And I think we're talking about this 1280 level for a price target from this price pattern here. We have a nice cup and handle price pattern in the Russell. We got a nice solid breakout last week, and we are continuing to head up. I would expect this to continue up to probably the 1280 level, continue and finish out this pattern. However, I do have that's not a slam dunk as far as things go. So let's take a look at what the other indices are doing to get an idea of what might change that. So here we have the SPX. I would expect the SPX to probably come up to new highs and roll over. This is awful close to new highs to have the Russell go to 1280. So that's a little bit of a concern here. In order for that to happen, we'd have to see the Russell pushing a little harder than the SPX in order to meet that 1280 level at the same time this reaches a 1220. If the SPX rolls over early, then that might be a sign that the Russell's pretty much done for the time being. If we take a look at the NDX, we have the same thing. You notice the NDX was a little bit relatively weak from a price movement standpoint from a lot of the other indices because we were already close to the highs. And it's kind of waiting for the other ones to catch up. So I'd also expect a little bit of weakness in the NDX. And the Dow, in order for my scenario to play out, would have to be very powerful compared to everything else. In other words, we'd want to see a fairly large move up in the Dow, fairly large move up in the Russell, the SPX and the index relatively flat. That would be a recipe for the market to roll and have a significant pullback. If other things happen, such as the SPX and the index break out, that's a different story. If we get a solid breakout in the SPX and the NDX earlier in the week, that means we're probably going to extend higher than the 1280, continue higher in the Russell, probably closer to the 1310 level. Or to build it more accurately, the Russell's going to go up until the Dow. If we get the other breakout in the other two indices, the Russell's going to go up until the Dow's at 18.3. So we'll have to keep that in mind. And of course, if everything turns early, I'm perfectly fine with that too. So, but those are the three different scenarios we have. The indices are a little bit out of sync. They're not terribly that bad. Obviously, the Russell's in a breakout. The other three are not. But as far as coming to our resistance levels on all three indices, they're a little bit off. So to get a little bit more solid in what's likely to happen in the market, we'd like them to even themselves out a little bit. All right, so let's see here. That's what I'm thinking for the markets. So let's take a look actually at a couple comments first, and then we'll go over to our positions here. When designing the entry to the M3, would it be better to have a typical deep in the money call to butterfly ratio 1 to 10 with perhaps additional verticals to adjust delta, or perhaps might it be better to change the ratio of verticals to entry at the beginning of the M3. For example, no verticals and a call. Butterfly ratio 1 to 10. Higher volatility. Okay, yeah. So that's a very long question for here, but essentially, it's going to depend on how you want your position to react when you get up into the more advanced levels. I mean, in general, what we're going to do here through the program is if we have a very low volatility, we'll usually add extra calls. If we have a high volatility, we're going to have extra butterflies. If we have somewhere in between, we might be somewhere in the middle. The reality is I like to trade them with 10 butterflies, 1 call, and verticals as much as I can, rather than adding 2 calls to 10 butterflies. Hopefully that answers your question. As far as putting extra butterflies in, I actually like to do that. If I can do 20 butterflies to 1 call, for example, that just gives me the ability to make more money. If the trade doesn't go well and the market goes up a lot, and I have 20 butterflies to 1 call, I'm just going to eventually reduce that size back down to 10 butterflies as the capital gets to be a problem. So if I have 20 butterflies in 1 call and the market goes up and capital starts to be an issue, then I'm going to want to crank back on the butterflies a little bit to keep my capital under control. But other than that, it's a little bit more of how you want the position to react. The more verticals and less calls you have, the more sensitive you are to volatility in both directions. So if you have, I don't know, 10, 20-point verticals in 1 call versus 20 versus 10 butterflies and 2 calls, for example, your 10 butterflies and 2 calls are going to do worse in a slow grinding up move with a significant volatility drop than the one with the verticals in it. If you have a very fast move in either direction, you're better off with the extra calls. With a volatility rise, especially, you're better off with doing the 2 calls and the butterflies. So it's a little bit dependent on what we're expecting from market conditions. Either way, either setup works. It's just one works slightly better than the other. So hopefully that is helpful with that answer. That's probably as detailed as I can get into that for now. Would 1 call to 5 butterflies still meet the guidelines for the Greeks at T+ airline? Oh, okay. So, yeah, if you do 1 call to buy 5 butterflies, you want to cut your size in half. Technically, that would be a $25,000 position. So, yeah, what's the lowest number of butterflies to call ratios I'd use? Like I said, I would rather see the 10 butterflies in there with some verticals and a call, rather than lowering my butterfly size down. If I lower my butterflies down, I'm essentially reducing my position size, and I'm essentially I'll have a problem making the money I want to make. So, FYI, with hedging, I am 48% on my March Bearish Butterfly close last week. Oh, cool. Best ever. Awesome. I'm already up over 100% of planned capital for the M3 trades this year, and I love it. Awesome, Mike. Great job. Great job. What's the lowest number of butterflies to 1 call I would start with an M3? The lowest number of butterflies to 1 call, well, like I said, I like to do 10 to 1. You can do less than that. You got to start cutting your capital back. In other words, your expectations back, because you're not going to make your money anymore. Let's see. I had to add a second call even with my verticals. So Andrew's saying I had to add a second call even with verticals on my 1220 M3 to keep my downside risk tolerable. You shouldn't have had to add a second call there. Your problem was more likely that you're too close to the shorts with your butterflies. So we'll look at the setup. There shouldn't have been an issue with the setup this month. I got a lot of questions on the April setup. Are you talking April or May, Andrew? Okay, yeah. So if you started with an April the butterfly and you were having issues at 1220, you can roll back to 1210 and open it there, a little bit further behind the market. You can control it better from there anyway. Even if you're almost outside the tent, then you're probably better off to do that. So, but you can do it both ways. I mean, you can add a second call. You didn't have to add a second call. You could have repositioned the butterflies back a little bit, or I could have taken you'd have to take a closer look at what you're doing. But typically we did, I think I went over this in group mentoring anyway last time. So we should, hopefully you're all set with that. All right, a couple more questions, and then I'm just going to kind of have to get rolling, you guys. Do I check the put call skew box in option view? Yes, I do. I will go over that a little bit later because I got another question on that. RVX near all-time lows. Okay. I guess that's just a comment saying RVX is near all-time lows. That's fine. 100% of planned capital up. And Daryl left a comment I completely don't understand. So, all right, so let's kind of move on, see what happened in March, and we'll go from there. So if you remember, we had closed the Bearish Butterfly in March really early for a 14.6% profit. We closed the M3 not last week, but the week before at a 10.3% profit, so that was going well. The rock trade was still open. If you remember last Monday, this is the position we were in here. We had 1180 butterflies on. We had verticals all the way out, 3 of them to 1210, 7 of them to 1220. We had our 1100 call on here. This is what our position looked like. Now, this being a rock trade, we were technically to the point where we're 10 points over our long strike. We were also having a positive Vega issue. In order to correct that positive Vega issue, we would have also had to do verticals that would have put a positive delta. So that's a pretty good case for saying, hey, we've outrun this position as far as an M3 trade goes. I'm 4 days to expiration, and I need to decide if I want to go into a rock trade or not. Realistically, I could have gone into a regular rock trade, and by what I mean by can I go into the rock trade or can I not is I need to have the time value to sell in order to add butterflies up at a certain level. So our normal procedure here would be to go to our 1220, 1260 butterflies, and you could have done that. I did an example of this in another presentation last week of switching into a 1220, 1260 rock trade. So I'm going to do something a little bit different with this one, and it's a little bit more of a more aggressive move. And instead of going into the 1260s where I'm very skinny on my time value, I'm going to do something a little different. So I'm just going to push this forward half an hour. What I did is I closed out the M3 trade and opened 1220 butterflies for my put. Normally I would be in 1260 butterflies. Like I said, my time value is a little skinny. So I came in here and I put my 10 longs where they would have been had I bought 1260 butterflies. And instead of selling the 1260s, I'm selling the 1250s because I have a lot of meat there. And then I'm buying only up to the 1270s instead of way up at the 1310s because there's not a whole lot of benefit for me going any higher. All I'm doing is I'm taking on additional risk for no reason. So when I put those butterflies in, which ends up essentially being a broken wing butterfly here at 1210, 1250, 1270, my delta was still a little bit too high. So I end up adding a 1230 call right here, 20 strikes higher, which would be the long strike of my 1280 butterflies if I was going to put them in. So this essentially is still considered a rock trade. It's a more advanced version of the rock trade, but it would look like this. So it would look like just like as if we had our butterflies here, we had our butterflies here, and we started adding in the next butterflies. The T+0 line is very similar. So going forward with that, if I go to Tuesday, this was obviously a constant up move all week, and it was fairly aggressive. But if I go to Tuesday, I ended up adding 2 more calls in here at 1230. Now, because I'm late in the trade and because I'm putting butterflies on, I start to run into a capital issue. So I had my longs for this lower butterfly at 1220. Those longs were actually down at 1170. I ended up rolling those up to 1190 as a capital control measure to bring my capital down to just $30,000 now. Before the roll, with the 3 calls before the roll, I was over 50. So brings that down. We get, I believe, another move up on Wednesday. Right. So at this point, I start running into a problem where I start exceeding my short strikes at my 1250 area. I don't want to do that. So I just come in and I roll these short strikes to where they belong, 1270, which is where they should have, 1260, I'm sorry, which is where they should have been in the first place. So now I have my 50-point wing down here. I don't need to do anything with the top. There's really no benefit to doing that. And then I buy another call here, and then I sell 4 calls at 2060. So this represents, this position here represents my butterflies at 1260, and this here starts to represent my butterflies at 1280, only I can't sell 1280s, there's no time value. I can't sell 1270s, there's no time value, so I sell the 1260s, and I have the vertical. Now, I don't want to close off the other side yet, not until the market gets up to probably close to 1280, but that never happens. But this is the position we looked like coming out of Wednesday. We back this off. I know this might be complicated for some. It's a little outside the normal guidelines. I showed one last week with complete normal guidelines, but I just want to do something different here. So, like I said, it's a little bit more aggressive. We're getting drawn down a little bit from the fairly aggressive market moves here. But this is where I went in, coming into Thursday. Actually, posting me a little bit high delta for some reason. I'm sure I was below that a little bit. But anyway, let's just move forward. Oh, so Thursday, this actually got pulled off on Thursday a little bit, or it didn't back down, but it didn't go up any higher. So ended up near the middle of the day, we're actually up to the a little over 10%, right? Almost 11, 12%. So took that opportunity to close the trade out. This is what the trade looked like when it was closed out. If I back this off to, let's see. This is what we looked like when we closed out on Thursday. So that ended up being a good trade. Ended up, I don't know, like 11 or 12% or something. I'll give you the exact numbers when I do that. And that was the rock trade for March. So good trade there. And let's see, if I go to our last trade for March, and that'll take a few more questions here. That was the March V Condor. So if we come into the March V Condor, this did have a couple adjustments coming in here because it was because the market was up so much. So if we come here Tuesday, we start having positive delta problems. So it's Tuesday at 11:30. I didn't adjust this till 5:30, the normal time, but I'm just showing you a midday point here before an adjustment. One of the delta range limits is plus 50 in the delta on a V Condor. And if we analyze the position, essentially what we're concerned about is the market backing off and coming down into here. So to fix that, we're just going to take this call and roll it forward. So on Tuesday, we actually rolled our call. We actually rolled our call at 1220 here up to 1240. So let's just go to the end of the day and show that. Actually, we rolled this up to 1240, cut our delta down to positive 30, gave us a position that looks like this. It's not showing us our black dot in the right place because we have, we're missing the value of this down here, which I can put in if we need to. But that's what the position looked like as of Tuesday. Wednesday, again, we once again had a positive delta issue, so the exact same type of thing. So I took our 1240 up to 1260, and brought our delta back down. Now we're up about 6,500. And then Thursday, let's see, did we do anything Thursday? No. We just let this expire. So here's what the position looks like as of Thursday afternoon. Right here, except that was up 16,000. That is a error here. It lost our lower put. We closed it out at. Let me just go forward here. Ended up being closed out about $6,300 profit. So good month for our very good month for the V Condor last month. So fairly easy to manage. Wasn't a big deal. So let's quickly go over what I have here for questions I can't answer because I have a limited amount of time. Oh, this is Daryl saying he doesn't see how we can make 100% of planned capital on a 50,000 planned capital trade. Daryl, he trades more advanced, so more advanced level M3 and Bearish Butterfly with some different types of hedging and stuff that we go over in more advanced stuff. So yeah, it is 100% profit and loss in 3 months is definitely possible. Can I show me the March 3 T-log? Yes, March 3 T-log, March M3 T-log. So here is what that looks like. We will start at the beginning. And that is till record 45. And that's the rest of the T-log there. So you can take a look at that and see what you did versus what I did. We just did a straight guidelines trade there, so we didn't do anything crazy. When rolling up butterflies from 1200 to 1230, for April M3 creates a negative delta problem. Do I suggest anything might correct this? You can put verticals. Right now it seems like removing some of the 1200 butterflies might be the best course of action. If you're in an April M3 and you're at 1230, let's see, I put your long strikes at 1280. That's because you're rolled up a little bit too much into the market. You probably should be at 1270. Sorry, about 1220. If you go to the 1220, you won't have the issue. That'll straighten out because you can correct it with verticals at 1220. What you could do for now maybe is roll back some of the 1230s to 1220, and that should kind of straighten that out. Is the recording available from Kickstart 9 p.m. last week? That you need to contact Seth at SMB. SMB controls all that video. They record it. They have it all on their server. So that's all going to be done on their end. How can I get Kickstart recording? Okay, yeah, same thing, Jens. I believe the Kickstart recordings are actually up now, and I haven't got an email from them, but I know Seth IM said they were up. So contact SMB. Those are the ones who will deal with that. Can I show us a T-log for the April Bearish Butterfly? Yeah, we can go into that in a second. So let me go into our April trades here. Looks like our questions are pretty much all set. I'm going to go to April Bearish Butterfly, and we'll go back to Monday. So this is where I sat. If you remember, I was a little bit slow in getting my second third in, which actually turned out to be fairly good. We were slow in rolling up, but we did eventually finally roll at 1220s. We're looking for a close up over 1240 in order to get our second third in here. We actually got that on Tuesday. We're up at 1241. We add in our second third right here at 1240. We are running a minus 225 delta, minus positive 379 theta, so that looks okay. Then let's see. Then Wednesday, I don't think we ever hit our next add point. Our next add point is 1260, so that wasn't hit on Wednesday. But the 11-point drop did draw us down quite a bit. Our delta theta numbers are still within our delta theta limits. We have our maximum delta limit still okay, so no big deal from that standpoint. We're just down a little bit here. If we come to Thursday, there was no adjustments, but Friday, we ended up adding the last third. So, because our last third was to be added when we exceeded 1240. We added our last third. We're now minus 405 delta. We are positive 343 theta, so we're still within our delta theta limits. We're within our maximum delta limits. We are hanging very, very negative delta here. Whoops, let me go to, let me go to Friday. All right, so there's our last third up there at 1260. Again, so it's 651 negative delta, so we're pushing our maximum negative delta limit. But we're still within our delta theta ratios, and we're not 21 days to expiration, so we're not in expiration guidelines yet. This is essentially how the bearish butterfly would be positioned. Positioned very nicely for the market to actually have some sort of a normal retracement. We are vulnerable to max lossing out on a very large up move until we hit 21 days to expiration here, where we hit our expiration guidelines. But at this point, unless we pull over minus 750 delta, or our delta theta ratio gets out of whack, which it won't this late in the trade, we're going to start pulling off some of these 1220s to get our delta down. And of course, if we pull over 1270, it's time to add the 1280s. So if the market moves at a reasonable pace, we're only down 5,700, which isn't too bad for the type of up move we had this late in the trade. But if the market pace is reasonable to the upside, this should be okay. If the market pace to the upside continues to be very quick, in other words, we don't have a couple of days for this to settle out, then it's possible we could pull a maximum loss to the upside. We are currently, let's see, looking at a maximum loss number here at about 1280. So a 20-point up move, because we're not watching this intraday, so a 20-point up move in a day will pull us out until we get into expiration guidelines. So that's the bearish butterfly, and if the market comes down, this should be actually a very good month for this. So we'll have to see how the market treats us going forward. Let's see, April bearish butterfly, do I have any thought about an additional roll from 1220 to 1260 to stay in 2/3? Yeah, I mean, if you're concerned about an up move, you could have rolled 1220 to 1260. I mean, that's a range extending technique for the bearish butterfly. You know, instead of adding in this last third, I could have just sold the 1220, rolled it to 1260, waited for the market to get to 1280 to put in the next third. That would extend my range about another 10 points or so. So that's certainly a legitimate technique if you want to extend your range in this. But we're just following the guidelines as written in the course here for this trade, and it comes out how it comes out. So you wanted to see the T-log for this. Let me just quickly show you that. It's fairly simple. We started at the 1200s. We rolled to the 1220s. We added the 1240s. We added the 1260s. So not a whole lot of moves here. Just scaling in one roll. And let's see. We have an April M3 trade, which is doing fairly well here. So let me just take a look at this. As of last Monday, this was our April M3 trade. Nope. Let me go to our April M3 trade. Right, remember we entered with 12 butterflies here? And I don't know, I think we entered actually at 1200. Right, so yeah, so this is pretty much our entry position. We entered 1200. Added the one call, 56 days to expiration, hadn't touched the position until now. Or actually, as of Monday afternoon. Finally, by Tuesday, we started running into this delta issue. So I'm just going to kick this back a half an hour. So this was our first adjustment. We're almost 100 delta. I think by the end of the day, we were 100 delta, which is why it went. Plus, we're at the edge of the 10th, so realistically, we'd consider adjusting at around 75. But I believe we're actually over 100 by 1530 here. I just took 1200s, rolled them to 1210, and we brought ourselves down to minus 42. And this is what the position looks like here, so still a fairly healthy-looking position. Then on Wednesday, we ran into another delta problem outside the tent. right? And we do 6 more. We do 6, 12, 10, 12, 20s. Bring us back down again to under minus 50 outside the tent. Here's what that position looks like. We go to Thursday. We had another delta problem outside the tent. We did 6 more, 12, 10, 12, 20s, and we're in this position as of Wednesday. So just simplistic verticals here, a little bit every day, because the market was so aggressive to the upside. And then Friday, we finally get a fairly large up move here, and we push past our, push more than 10 points past our long strike. So let's let this update a little bit here. So now we're up at around 1265. We are more than 10 points past our long strike. By guidelines, we roll up. So we're just going to take this thing and roll it up. And if we go to the next half hour, we roll to 1220, right? And if you were going to enter a M3 for April, this would be a position that you could run. So right now I rolled up 20 points, so I'm at 1220 butterflies. I have verticals at 1220, 1240, and I have one 1080 call. I'm slightly negative delta here. I could go a little bit more aggressive if I wanted to, but I wouldn't tend to do that. Here is the position here. I like to be about minus 75 delta at the edge of the tent. I'm right at the edge of the tent here. Set up really nicely for a pullback and not too bad to the upside. If you're entering an M3 for April late and you wanted to enter one, this would be a position that I'd be very interested in. And you know, I might do a little bit more to flatten the delta out. So I might go maybe something like this. If it was an entry position and I was completely neutral bias, I could come into here. I have a nice nice downside here that's decent, and a nice flat T+0 line. So that would be like an entry position for an M3 there. But I'm happy with this position as we sit. So fairly simple trade, you know, one roll because of the aggressiveness of the up move last week. But that's the M3. Now, depending on when you enter this, this could have been a tough trade. I entered a live position that I'm going to be showing at 10 o'clock at the very bottom of this, and I entered it at 1190. And I got actually a little bit aggressive on the theta with it, so that's drawn down a little bit. You know, people ask me, why do you enter an M3 56 days? The thing is, you can really enter it whenever you want. It doesn't really matter. But the reality is you never know when the money is going to come into the trade. We happen to get we happen to enter this 56 days, had to do nothing for quite a long time, and ended up picking up a lot of profit and loss before this up move. So it's just a nice, stable profit and loss curve. Like I said, I entered one late at 1190, and it was when the market was running sideways. And one of the things is when the market runs sideways like that, you pay too much. So if I'm at the Russell, and you know, if the market, I think we must enter down in here somewhere because we entered way down at the 1190. You know, a lot of times you end up pricing is kind of high under those circumstances, and then pricing drops after you get the explosive up move. And I got in before the price has dropped, essentially. So that trade's going to be drawn down a little bit. I think it's like 2% or 2.5% or something. But certainly, if you entered 56 days, you really shouldn't be having a problem if you stay within the guidelines there. So nice trade here. And let's see, we obviously had, and I'm starting to run a little late here, so we got to move on. But we also had an M3, that was the M3. We got a V Condor for April, which had nothing. So let me just push to the V Condor here. This is what we looked like in the V Condor. We're up about $3,000. Another really nice month for a V Condor here. Not all conditions are good conditions for V Condor, right? The way this reacts is a little bit condition dependent. But the last couple of months have been just really nice Condor months. So here's what the position looks like at this point. So it's up about 3,000. If the market continues to grind up, it'll look pretty nice here. So that's that. Our rock trade was entered on Wednesday. Let's go back to Wednesday. I'll just kind of motor on a little bit here, guys, because I got to. I have this other meeting at 10. I got to get prepared for. So here, let's see. Here is our rock entry. We could, for the first time in a while, we could actually run a rock trade, which is kind of cool. So I came in here. I did 10 1230 butterflies. I did 5 1270 butterflies. Put us about minus 180 delta, 190. Excuse me. Analyze graph looks like this. Of course, we had a fairly good up move, so we're drawing down just a little bit. And let's see, I did make an adjustment on this already. I think it wasn't until Friday, though. Let me just check. Yep, so this is a position we held till Friday. Friday, because the market went up, we ended up buying the rest of our 1270s, and we started buying some of our 1290s. So let's just kind of go to Friday here. And we're drawing down about $854, not a big deal. We are, you can see I added in the rest of these here, and I put in 7 of these 1290s, and that gives us a minus 184 delta, which is perfect. And a position looks like this. So if the market chills out a little bit here and grinds up or doesn't get too choppy, then this should be a good trade. We'll see how it goes. That's the rock trade entry. And then we have our May positions. I entered a May Bearish Butterfly, which fantastic entry, by the way. We'll see what the market does to see if it continues to be fantastic. But Bearish Butterfly for May is going to look like this. It's just a single butterfly, or a single set of butterflies here at 1240, which is about 24 points behind the market at the time. This position is going to look like that. Let's go to the Analyze graph. Again, if the market backs off, that'll be good. If we can go a little higher and get in 2/3, push to a little over 1280, that would be nice. The M3 trade for May. Again, we're starting to get some normalization in our skews here for the low volatility environment we're in. We're actually starting to put a couple verticals in here. I ended up doing just 2 though. 10 butterflies at 1240, 2 verticals at 1240, 1250, and a call at 700. And our entry for May M3 looks like this. Nice flat T plus 0 line. Nice looking trade. And we had an entry for a V Condor for May, which turned out being shorts at 1170 and shorts at 1340, and then we had our straddle here at 1250. This is a position that looks like this. So we are good to go for our May trades. March is all closed out. If we take a look at our results thus far this year, Bearish Butterfly, we had a 13% loss in January. We had a 16.5%. This is all off planned capital. 16.5% in February, 14.6% in March, 32% for the year. The M3, we had 9.6, 4.9, 10.3, 24.8 for the year. The rock trade's been performing pretty well this year. We have 42.3% for the year on that, and the V trade's been performing better than normal. 6.1, 9.43, and 12.6. So it's been good. It's been a relatively good year so far. So let's just see if we have any other questions here, and we'll roll forward here. Recordings. I did the April Bearish Butterfly T-log, April Bearish Butterfly. I thought about additional roll. Oh yeah, okay, we did that. Is there a rule of thumb on the number of times you can roll Bearish Butterfly before you hit maximum loss? The issue is going to be more dependent on how close you are to expiration when the market moves and what the skews are in the T plus 0 line when the market moves. Realistically, depending on environment, sometimes you can go 120 points on a Bearish Butterfly for it max losses out. You probably wouldn't make it much more than that by the guidelines. If you have a move late in the trade, like we did this time, you'd probably have about a 60 point max loss range from the time when you enter it till it goes up. But again, that's going to be dependent on how long it takes to go up and how fast it goes up. If you have a very low volatility environment, in other words, in a very high volatility environment, you can stretch, a lot of times get 120 points out of that. Really low volatility environment, sometimes you're down as low, especially if it's extremely low, or if you're late in the trade, sometimes you're cut as low as 40 to 60 points. So that's usually what we get for range on that. Thank you, Ken. T-log for the M3 in March. I gave you that, I believe. April M3, I had to roll my position on Thursday, but did not get any good fills. Yeah, the market situation on getting executed in the last week has been challenging, and you're going to notice that as you're live trading. You're going to have cycles that are very, very easy. In other words, where fills come easy and they come fast, and you can get very good pricing, very fast execution. And then you're going to have other environments where it just stinks, where you're going to have it's going to be hard to execute, and you're going to have mid prices that are just they're not accurate. They don't represent what's going on. Sometimes they're really high, really low. Stuff like that. That was the type of environment, and you get that when the market makers or the participants in the market have a very solid idea where the market's going, and that's what they had last week. They had a very solid idea where the market was going, and it's just very hard to move stuff around. So yeah, tough execution last week. So, well, Jen, yeah. So you stretched an M3 instead of rolled it, which is fine. The thing is, you stretched it, which is great, and now when the market pulls back, right? So we should get a pullback soon. Just even an intraday pullback. That's when you roll up the other side. So you can roll it up very efficiently in that manner. Okay, great. So I think that's all we have for questions. We've went over the results. We've made positions. The only other question I have, put call skews and option view. Yes, I got a question about put call skews. Do I use them with the Bearish Butterfly? Yes, I use them with the Bearish Butterfly, the V-Condor, the Rock, all the trades. You're going to get, when you check this in your settings here, when you combine your put-call skews, you're going to get often a dot that doesn't line up with your line, which is fine. That's normal. What we're after is what the theoretical Greeks are of your position, not the Greeks based off of a mispriced option. So that being the case, if the options are mispriced, your dot may get significantly away from your line, which is perfectly fine. What we want to know is how is the position going to react when this price moves up a certain amount of money. And if you combine your put call skews, it's a heck of a lot more accurate than if you uncombine them. So I am using combined put call skews on all the trades we do here. It gives you anything that's more than a vertical spread. It gives you a much more accurate representation of what's going to happen to your profit and loss when the market moves. So I do combine put call skews on all those. So that's all the questions. So thank you, everybody, and we'll see you next week.